Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody is doing well. Obviously, guys, we're filming this one on a Saturday. I was a bit indisposed last night, had an event to attend to, so I apologize for that. But we will be recapping the Friday session today together. So in Friday's news, guys, it was a tale of two stories. We had number one, Microsoft and Google earnings, which performed very well, and they helped in lifting the markets. And then the second part of the story was PCE inflation. We got some inflation numbers on Friday morning that were a little bit hotter than expected. So in today's video, guys, we're going to go over those Friday PCE data numbers and see exactly why inflation came in hotter than expected. Then, of course, we'll be doing our major market rundown in terms of technical analysis on major stock market indexes and our big tech names, see how those are shaping up after last week's bounce. And lastly, guys, we're going to cover a couple of things together. We have some subscriber requests to go through right here. So James wants us to do some Coinbase technicals. We'll do that. No problem at all, James. We'll also do for Philly, PANW, Palo Alto Network. So we'll be going over the technicals on that one, see how that's shaping up as well. And then lastly, Naveed is going to ask us for ACMR and FCX. So I'll be doing all those at the end of the video, and we're going to wrap it up with a portfolio review to see how I close the week in terms of trading and what trades do I have open for the Monday session. So a lot to cover today, guys. Let's get into it right away. So SPY on the Friday session up 0.95%, very healthy day for the SPY. QQ up 1.54%, very nice recovery, pretty much off the back of those outstanding Microsoft and Google earnings. All of that combined gave us a very decent heat map for the day, guys. So if we take a look here, most of your big tech was up except for Apple. Microsoft, Google really leading the charge here, but backed up by semiconductors. Semiconductors have an amazing day because Microsoft, Google, and Meta, Facebook, over the course of the week said that they were increasing capital expenditures towards more GPUs to advance their AI programs. Obviously, that was very bullish for the entire semiconductor industry, as it just reiterates the substantial amount of demand that there is still for semiconductors and correlated products. Amazon also getting a nice boost as well off of those big tech earnings. For the bottom half of the market, guys, well, healthcare, although healthcare did have a good day, AbbVie earnings really contributed to bringing that sector largely flat on the course of the day. AbbVie had some decent earnings, but the market not reacting to them very favorably. Financials as well. Financials was a weak point in the market. They performed tremendously over the past week, but on the Friday session, pulling a little bit back on those gains. The bottom half of the market, guys, fairly mixed as a whole, right? We did have more names that were green than red on the day, but you can see the large contributors to your indexes were, once again, big tech. Now, in terms of your one-day relative performance, guys, you can see the market was a little bit mixed if you really remove your impact from your big tech names. Really, the only other things that were up were consumer cyclicals a little bit. And then we had a very mixed rest of the market here. Healthcare performing slightly decently up 0.21%. Your loss leaders on the day, financials, energy, and utilities. On the 1 week relative, though, everything is looking very much better than 2 weeks ago. Every single sector of the market ending in the green. So very good session after all, guys, and a very good week to wrap up the markets. So before we get into our technicals, guys, let's take a very brief glance into our PCE inflation report. So let's take a look at the headlines here, guys. The expectation for year-over-year PCE was 2.6%. We actually came in hotter than expected at 2.8%. We also had a month-over-month comparison here coming in at about 0.3%. That was actually on par with the consensus of 0.3%. So things coming in a little bit hotter than expected, guys. That was your core, and even your normal PCE, not the core, was 2.7. The expectation was 2.6. So really coming in hotter than expected on your yearly numbers in terms of overall PCE and your core numbers. But it was not all that it seems, guys. So let's take a deeper dive into what that inflation actually meant. So let's move down here. Markets showed little reaction to the data, even though it came in hotter than expected, which was very curious, and I'll explain why, with Wall Street poised to open higher. Inflation reports released this morning were not as hot as feared, but investors should not get overly anchored to the idea that inflation has been completely cured and that the Fed will be cutting interest rates in the near term. The prospects of rate cuts remain, but they are not assured, and the Fed will likely need weakness in the labor market before they have the confidence to cut. So inflation still remaining a little bit sticky, and the Fed is probably going to wait for potential economic data to deteriorate. Think of deteriorating GDP numbers and think of deteriorating jobs numbers. Those would really push the Fed forward in decreasing rate cuts, as that would prove to them that rates have been too high for too long and they're starting to hurt the underlying economy. Now, consumers showed that they are still spending despite the elevated price levels. Personal spending rose 0.8% on the month, a touch higher than the 0.7% estimate. Personal income increased 0.5% in line with expectations and higher than the 0.3% increase in the previous month. So if you notice, there's a difference here. Spending rose faster than wage growth. So that means that people are spending more than they're earning, and that contributes to the next line here. Personal savings rate fell to 3.2%, down 0.4 percentage points from February, and 2 full percentage points from a year ago as household dipped into savings to keep spending afloat. Think about those COVID-19 pandemic savings that are now getting slightly eroded by higher prices and inflation. The report follows bad inflation news from Thursday and likely locks the Fed into holding the line on interest rates through at least the summer, unless there is some substantial changes in the data. We've been talking about this on the channel a lot here, guys, right? With sticky inflation, the Fed really doesn't feel any urgency to cut rates anytime soon, as long as the jobs market and the economy are still healthy. They will maintain them as high as possible for as long as possible without trying to break anything. Now, where did the inflation come from? Once again, as we've been saying on the channel for the past 4 months, it is services, guys. So services prices increased 0.4% on the month, while goods were up only 0.1%, reflecting a swing in consumer prices as goods inflation dominated since the early days of the COVID pandemic. You guys remember this, right? The price of goods skyrocketed, and now they are back into deflationary territory. The only remaining sticky element of inflation is services, and we can see that even better, guys, when we break down the table. I'm not going to spend too much time on this, but I just want to show you. Take a look at your goods numbers, right? Ever since 2023, a lot of months were actually negative on your reads, especially since the month of October, right? Net declines in goods. We had a slight little uptick here in the month of February, but now March, we're back to 0.1, and that's a month over month, right? So if you were to take this number annualized, it would only be 1.2% annualized inflation. Really, really good in terms of goods. Where is your sticky elements? It is still in services. 0.4% month over month, guys. Annualized times 12, that's 4.8%. And that is roughly what was the CPI was showing as well, right? 4.8, 5%. Services still a little bit sticky. And mainly, a lot of that, guys, is in your housing services, healthcare, and transportation. So take a look at this, guys. Transportation services, 1.6% annualized. Too hot. Housing and utilities, also 0.5%. Right. And even down here, energy is also a major contributor to that, 1.2% annualized. And the housing overall number down here, not housing services, but actually housing. So rents, mortgages, stuff like that. 0.4% annualized, which is close, 0.4% month over month, which is close to 5% annualized. So really a point in the favor of services remaining sticky, right? And we've been talking about this, but a lot of seasonal factors at play, guys. For a lot of services, a lot of your service companies increase prices at the beginning of the year. Think of insurance companies, think of medical specialized companies and stuff like that. They usually only increase their services once at the beginning of the year, and then they're pretty much done. So we're still seeing a little bit of those seasonal effects from January, February, and March combined. Now, let's put this all into perspective, guys, on a graph. What does it look like? Well, take a look, guys. Here is your graph for PCE. You can see that your yellow is core goods. We can see that core goods inflation is largely gone ever since the midpoint of last year in June. We've really been in a deflationary cycle in terms of goods, so the inflation isn't coming from there. Arguably, it's not even coming from food and energy anymore. That's the light blue category. That has almost disappeared. Where is the remainder of inflation? Well, housing, even though housing is downtrending, it is still sticky, and your green is your core services, all the ones that we were talking about on the previous page. They are a majority of your inflation right now. So we can see, guys, those two things most likely will be coming down over the course of the year, but a lot of good has already been done in food and energy and core goods, which is very important to the consumer. So this chart is looking very good in my opinion, guys. So all in all, not a very bad report, but just not an amazingly good report that can push the Fed to cut rates any sooner than we anticipate. So all in all, guys, It's not that I'm satisfied by the report, but it could be a lot worse. It still shows that inflation is a little bit sticky, but the overall trend is netly down. There's only a few elements remaining, guys. 90% plus of all elements have now come netly down in terms of inflation, so it's good. And you may say, well, Will, but whenever I go shopping for things, prices are still high. And yes, guys, that will be the case, right? In 2021, the scale of prices, what happened to prices for food and other elements like this, right? Prices went like this. That was normal. That's when we were seeing, 6, 8, 9% annualized inflation. Now we're back down to about 3%. So the curve to the upside is now looking like this. This pricing impact, guys, unfortunately, will probably never go away. It is already baked into the economy at that point. Even if we have a recession or something like that, do not expect prices to come back down to where they were prior to the pandemic. We just have to live with this increase in costs, and that is what you call a permanent loss to the consumer in terms of economic terms. The goal of the Fed is for this curve not to remain this steep, is that we can get back to a normalized curve of inflation. Prices are going to go up every single year, guys. There's no question about it, right? It's just the rate of inflation. So yes, prices are still high in relation to what they were 3-4 years ago. That everybody knows. However, are they getting more and more expensive rapidly? And the answer, for the most part, is no. We're back to more streamlined inflation, and that's exactly what the Federal Reserve wants. So hopefully that is clear for everybody, okay? Now, let's move into our technical analysis right away and see where we stand on the indexes. So we were in a daily downtrend, right? Clear daily downtrend right here. And then we were watching for the size of the bounce, and if we got a good enough bounce, it sets up the bulls for the higher low into higher high daily trend conversion. Well, now we have it, guys. So that's why I always say the size of the bounce is crucial, right? Give me a good bounce and the bulls have a very good shot at getting a new daily uptrend. And that was the case. We got a over 50% retracement here from your leg down. And now, guys, we are back into a daily uptrend, right? Highs, higher lows, higher highs. So daily uptrend recaptured by the bulls, and nice job in closing above our moving averages. We closed above the 50, which is this pink line right here. We did close above the 12 EMA as well. We're now still battling with this current area of resistance, right? Which was support for the bulls before losing it. So now we're battling up this to the upside. The bulls, if we have a nice Monday session, guys, should be able to clear this, and that'll create a lot of space here for the eventual pullback. Maybe use this area once again as support and give us another daily leg higher. Keep in mind, guys, this week is going to be another week that is all about earnings. So many big companies reporting this week, guys. Think of, Amazon, AMD, PayPal, McDonald's, Coca-Cola, Starbucks, right? Very big companies. MasterCard on Wednesday as well. Qualcomm, another semiconductor play. Then on Thursday, another huge one, guys. We get Apple, right? So Apple is going to be a huge one to watch. Coinbase, Square, just so many large players in the game to report earnings this week. So this week will largely be an earnings cycle as well. Keep in mind, we also have a Federal Reserve meeting on the Wednesday session with Jerome Powell. Not really expecting any changes in interest rates. The key point of that meeting will be how he answers questions on the upticks in inflation that we've seen January, February, March, and April at this point, right? So he's going to have to address the elevated levels of inflation that we've been getting over the past 3-4 months, and how he answers those questions is going to be pivotal to understanding whether or not the Fed still thinks that it has inflation under control, or whether or not they're starting to get worried. If you ask me, guys, I think that Jerome Powell will probably reiterate his stance that he's been having over the past month, that it'll still be a bumpy road back down to 2%, but that they have inflation under control. So those are the key things to watch this week, right? So in terms of the technicals, looking very good for the bulls. Daily uptrend is reset. Now that we have a daily uptrend, our weekly upswing is actually confirmed at this point. And you can even see on the weekly, guys, the weekly bounce at this point is getting fairly good, already up to 0.5%. What we need to see for the bulls is get me as high as possible, guys, in relation to 516. If we can get back up to 516 on the weekly with a nice weekly close next week, well, the bulls on the weekly will take back enough of this move to potentially set up the two-step weekly trend change back to the bulls. So not looking bad at all, guys. A lot of data this week, so we'll see how it plays out. And obviously, if we get the unexpected rollover, well, then we will just still be in extended weekly consolidation. It could turn into a weekly downtrend, and that would just be further healthy monthly consolidation, still hunting for the monthly higher low for further trend continuation. So in any case, guys, it is definitely a buy the dip opportunity, but the markets are looking fairly decent. Now moving on to QQQ. So QQQ also not looking too bad at all. Daily uptrend is reset by the bulls at this point. So any move lower, just going to be looking for a higher low for potential further trend continuation. The size of the bounce was key, and the bulls put in a fairly decent bounce. We were talking a bounce of roughly 50%, excuse me, before reverting back to find that higher low and higher high. Looking very good. They have now converted, so step one is complete. We're dealing with a little bit of overhead resistance similar to the SPY. This green box, horizontal previous support, now acting as resistance, and we do have the moving averages acting as resistance there as well. So this will need a little bit of a push here on the Monday session and Tuesday as well. We don't really have any big tech names to do that on the Monday session, so we will likely need to get continued follow through from very good big tech earnings from last week to push us above this area by the Monday session. If we can get clear of this green box right here, 434-ish, well, it sets up the bulls beautifully to be able to set the higher low into further daily trend change. In terms of the weekly bounce, well, we were in a weekly downtrend currently, and now the bulls are starting to recapture a very healthy portion of the most recent weekly leg down, talking about 50% similar to the SPY. So if we can come up into the 618, roughly that same 434, 435 area, if we can come up into this area by this week, the bulls stand a very good chance at either the V-shaped recovery or the more likely two-step weekly recovery of a weekly uptrend after now being in a weekly downtrend for a better part of the last month. So all in all, the bulls doing good, creating a lot of space, but we need a very positive Jerome Powell on Wednesday, and we also need positivity from your major big tech names that will be reporting this week, in my opinion. Moving on to financials now. So financials down 0.15%, but that's okay. Financials did a great job in bouncing, guys. We were watching the size of this bounce. The bulls bounced up beautifully, almost to 75% of the leg of selling, which gives them the best probabilities at resetting this into a daily uptrend. So now we are still trying to find the daily higher low and reset that daily uptrend, exactly similar to what QQQ did last week. So financials not looking bad at all. Where are we trying to get the higher low, guys? Well, we're using the moving averages as some good support right now. So looking forward for the bulls to maintain that. In terms of how do you know that this daily leg down is currently finished and that the higher low is set? Just once again, I'll remind you, watch for the hourly trend change. You can see when they have the hourly uptrend, the daily move higher is underway, and then when they consolidate, usually you have a loss of that hourly uptrend, and that's exactly what happened last week. So we'll be looking, if the bulls can reset this into the Monday session, that will mean that your daily higher low is set, and then we'll look for a break of last week's highs, 41.27, to really push us above, get that daily uptrend going, and really start reversing more of this weekly damage. The weekly move, however, is still very, very healthy. Beautiful weekly uptrend, weekly higher low, and now looking to just push this further. So no real red flags from the bears, right? If ever we roll this over, we will just be looking, guys, for a potential weekly downtrend, and this lower low right here, 39.60, will be crucial in holding for the bulls. If they lose that, it will be weekly downtrend. Just in case, if they do, healthy monthly consolidation, gorgeous monthly uptrend. I'm looking for the higher low for further continuation down later point in the year, and the decrease of interest rates at a later point in the year, maybe fall, right? That should be the real thing. That really makes this financials index run hard. Now moving into XLV healthcare, right? So healthcare also, we were in a daily downtrend, and then last week the bulls did something. They engulfed our most recent lower high here, and we've engulfed it. Now just looking for the higher low to get the daily trend change. So this week, what I need to see from healthcare bulls is a break above the high of Tuesday's session, 141.59. If we can get that, daily uptrend is back to the bulls after having been stuck here for a while, and then we would have a first move up on the weekly. The weekly is currently in a weekly downtrend, and we are currently having nice support from your previous all-time highs. That is currently acting as support. So if we can get the daily uptrend going over the course of this week, then we'll measure the size of the weekly bounce. Keep in mind, for it to be a healthy weekly bounce, need to bounce this week up until about 0.5 to about 0.61 on the fib, right? 50% or 61% retracement. That would give the bulls the best chance at potentially reversing this back into a weekly uptrend after being stuck in this weekly downtrend. So all in all, the bulls looking fairly good. We were always just looking for that monthly higher low for further trend continuation. So our lower timeframes are looking decent, and the higher timeframes now are finding their bottom. So looking very good on healthcare as well. Now moving on to semiconductors. So semiconductors as well, resetting the daily uptrend. We were kind of getting nervous for semiconductors, right? Because we lost a crucial level, this horizontal area of support. We had lost it over the course of last week, big daily push down, and we were expecting the lower high, which we got over the course of the Wednesday session. And then it was up to the bulls to protect these lows and get back the daily uptrend, which they did. So now healthily back above, guys, this area of support, that is the 216 all the way to about 212 area. We just closed above it on Friday. And look, now we're back above all our moving averages. So daily uptrend is now in motion. It means that your weekly higher low is set at the low of last week, looking very good. It was a weekly downtrend, but now the bulls have an opportunity to potentially engulf this move or at least go for the two-step weekly uptrend recovery, looking very good for semiconductors. Semiconductors were also hunting for their monthly higher low too, and if we get that weekly uptrend back, that will be your confirmation that the monthly higher low is set and that we're most likely going a lot higher for the remainder of the year, guys. So semiconductors looking very bullish. I'll remind you a few key players of semiconductors this week. Monday, we have NXPI, very big name in the sector. Then on Tuesday, obviously we have AMD. And then on Wednesday as well, I believe we have, there's one more in here somewhere that I can't seem to find right now. But yeah, so it's just basically a very, very decent week for semiconductors to be had as a whole. So going to be very curious to see, can they get it done here, guys, right, over the course of the week? Let me just check real quick if AVGO is this week. I don't think they're this week. No, they're all the way out in the month of June at this point. So semiconductors looking good. Weekly earnings will be key for this stock as well. Now, lastly, moving into the IWM Russell. So IWM Russell trying for the daily trend reversal, but we don't quite have it. That would need a break of Monday's high for the daily trend reversal. And if we get that, guys, the daily trend reversal, it'll mean that your weekly move down is finished. And then once again, similar to the rest of our indexes, looking for the size of the move to then be able to recapture the weekly uptrend. So the Russell not looking too bad, but keep in mind, we have lost the weekly uptrend. So at this point, the bulls either need to do the V-shaped recovery, which is an unlikely trade in my opinion, or the more likely two-step recovery. If we can get back above here, on the weekly, back above our red box, 201, it would allow us to then use this area as support and reset the weekly trend, guys. This red box right here, huge prior support right here, resistance, resistance, resistance. Now we're using this area again. So if we can mount above, right, breakout, retest this area, then we could be moving back to the 211. So not looking too bad on the Russell, but as I keep saying on the channel, guys, just not a favorable trade until interest rates really start coming down heavily. Now, lastly, the Dow Jones. Dow Jones looking fairly weak compared to our other indexes, right? So the Dow Jones has not recaptured the daily uptrend, still trying to do it, right? Daily downtrend, clear as day. Nice little move up. What was the size of the bounce on the Dow Jones? The size of the bounce on the Dow Jones was about 61%. So that is very good. Technically speaking, the bulls do have the probabilities to reset this daily uptrend, but we need a break of the Wednesday high. If we can get a break of the Wednesday high, guys, it's going to clear us above a lot of different areas. Namely, number one, horizontal resistance. That is 38,500. Number two, all of these moving averages, right? We have the 12, the 50, and the 26 around the same area of confluence. So we're going to need a very big push by the Dow Jones to make this happen. But if we get it, if we get above here, we can then use that area as support and just continue on this daily uptrend. If we do get the daily uptrend, guys, we move out, zoom out to the weekly, and then it'll be up to the bulls to recapture as much as possible of this weekly move to try and reset the weekly uptrend, right? It was a gorgeous weekly uptrend over here. We lost it by losing these lows, but we never set the weekly downtrend, right? Weekly downtrend needs lower high, lower low, similar to what you saw on healthcare, right? Lower high, lower low. Well, Dow Jones never did that. It's just one weekly push down. We're expecting the lower high, and then it'll be up to the bulls to reverse this into a weekly uptrend. If not, weekly downtrend on the Dow Jones, and just similar to healthcare as well, just very healthy monthly consolidation, guys, right? So as a whole, the bulls are looking very, very healthy, but still a lot of work to do on the Dow Jones. This week, very big week for the Dow Jones, guys. A lot of Dow Jones companies are reporting this week, right? Think of Amazon, think of Apple, think of Coca-Cola, think of MasterCard, right? And if they all report decently and get a bump after earnings, expect the Dow Jones to actually follow through and the bulls to remain back in control of your short-term timeframes. Now let's do a little bit of crypto because because I didn't cover it the past couple of days. So Bitcoin, not much to see on this chart right here, guys. Still just consolidating, right? So daily downtrend was underway. We got the engulfing move. So we're looking for the bulls to set the daily higher low for the trend change. But unfortunately, guys, not recapturing the hourly trend change at all. We get a couple attempts at it, and then they just kind of fade away, right? Once again, we're now making an attempt at it, but we need to get some follow through here. If we can get some follow through over the course of the next couple of days, well, then we're going to be looking for the daily uptrend resumption by the bulls. We would need a break of 67,300-ish to get that daily break. Need to get above these moving averages, guys. I need to get above this area right here, 66,300, which is pretty much your previous areas of all-time high resistance, right? Bitcoin in the longer time frames, still in a weekly downtrend, although it's a very tight very tight range up here. It is technically a weekly downtrend right now, but it looks very good indeed for continuation. So even if we continue range bound here, little bit of lack of enthusiasm after the halving event, right? No real major catalysts for Bitcoin right now. The halving event is past. The ETFs have been approved. So now Bitcoin's kind of a little bit of a limbo mode. It's kind of following risk on assets until we get more certainty from the Federal Reserve and until we get more certainty in the markets, right? Bigger recovery in SPY, bigger recovery in QQQ. I don't expect Bitcoin to do much of anything on its own. So as of now, just still in a range of consolidation, very, very, very limited price action. I still think Bitcoin is very healthy as long as we maintain here at the maximum drop here, 55,000, guys. Still just looking for a very healthy monthly higher low for trend continuation once the risk on trade becomes more prevalent, guys. And in my opinion, that's really only going to start most likely maybe June or July is when we really start seeing these expansion legs higher on the weekly timeframes, right? Into Ethereum now. Ethereum largely displaying the same characteristics as Bitcoin, right? So we were watching this daily downtrend, and then we were watching for the signs of the bulls trying to reverse. And we are getting a little bit of a reversal now. Ethereum trying to get the daily uptrend, still not there yet. We need a break of 3,300. We would get the daily uptrend back, and we would come back above these moving averages. So very crucial zone Ethereum is pulling up right now. This entire time of consolidation, guys, we've been in a weekly downtrend as well. So it's been very, very healthy consolidation for Ethereum, in my opinion. If we can reverse this daily into an uptrend right here, then same rules as the rest of our markets apply, guys. Just look at the size of the bounce in relation to the lower high. As of now, the size of the bounce is decent, 50%, but if we can get higher, 3,350, even as high as maybe 3,500, that really sets up the bulls nicely for the weekly trend change. And if we can get the weekly trend change, that means that your monthly higher lows are set and that we are potentially moving on to another leg higher on Ethereum. Similar to Bitcoin, I don't really think that's much going to happen before maybe the end of May or maybe even early June, to where we really start seeing these expansion legs come back in a very, sustained mode, rather, sustained and consistent. So that's pretty much everything for crypto. Now moving on to Apple, still looking good on crypto, by the way, guys. Still a buy the dip opportunity for further gains later on in the year, in my opinion. So if we get further red, I'm going to keep buying those dips. Now let's move on to Apple. So Apple still struggling here on the Friday session. So down about 0.35%, even though most of its peers in big tech were up. Apple, unfortunately, down. And this is most likely, guys, a byproduct of earnings, right? There's a lot of uncertainty coming in to Apple earnings. The fact that they have 10% quarter over quarter declines in their iPhone sales. So we'll see how much that affects their bottom line on Thursday. Obviously, over the past 3 months, we've had a number of temporary issues, which we've raised concerns for on the channel. But those temporary issues are just that. They are temporary issues. We need to remember the long-term pros of being Apple shareholders. 3% buybacks per year, best ecosystem in the world, a huge moat with their app store and brand power, and the services division as a percentage of revenue is increasing. That is their highest margin business, guys. Apple services, right? Think of cloud subscription services. Think of app store fees, right? All of their services, very, very decent line of business for Apple, one of their highest performing sectors. So a lot of the emphasis, guys, on Thursday, we'll be looking to that. In terms of our price action, guys, well, there's not much more to move Apple before its own earnings. A couple of the names that may move Apple a little bit. Well, Amazon might move Apple a little bit just as a bit of a carry trade for big tech, but really not much in terms of the rest of the market to move Apple before its own earnings. So what we're going to be looking for here, guys, is to protect as much as possible of this most recent move, guys, right? Now, at least we have a good cushion. We're still about, 3% from the lows. But if Apple can just keep above this area right here, stay above our horizontal line of support, 168.50, and really hold these 170, 172 levels, it gives us 3-4% worth of cushion that if ever Apple earnings are badly received by the market, at least we can protect these lower lows at 164. The last thing I would want to see for Apple is just maintaining this daily downtrend into its earnings, and then on earnings we're too close to the lows, Apple comes up with bad earnings, and then maybe that sends us, guys, into a further weekly leg down of this weekly downtrend right here, which could send us into the 155, 150. That would be a huge multi-year buying opportunity, guys. Every time Apple hits the 200 weekly moving average, look what happens. Touches it, explodes. Touches it, explodes, right? Touches it, explodes. So this is going to be another case where if it comes down here, guys, I will be exploding long-term calls on Apple. So very muted price action. The number one thing we need to look at, guys, is giving us as much as possible of a cushion. Still in the context of this daily move down, we're looking for the lower high, and then now it's up to the bulls, guys, to once again protect these lows. If we can get some good earnings from Apple, could be resetting the daily uptrend, and then we'll be looking, can we start reversing this weekly damage into a weekly uptrend? All in all, still very favorable prices for the company down here, but if we come lower for any which reason into the 150, 155, I just want you guys to know that I will be going heavy. We're talking maybe, 2-3 contracts on Apple, probably 1 year leap contracts on Apple. So looking to really get the most out of those. Moving on to AMD now. So AMD, similar to Apple, does have earnings this week on Tuesday. So price action for AMD is going to be muted. Now, we have done a good thing before earnings. We've recaptured the daily uptrend, but there's only 2 days of trading before earnings, right? So even if we get the daily uptrend here and come above this area of resistance, come in line with our moving averages, well, then earnings on AMD is very volatile, guys. Usually they have an expected move about 8 to 10%. So that could really send us either of 2 ways. If we come back into here, 166, 8 to 10%, guys, we'll take a look at this, right? 8 to 10% would put us right towards the bottom end of this range again, and 8% to the upside, well, that would really put us at the top end of our prior resistance, 182. So really a tale of an in-between section. I would like to see AMD get at least as high as 165, 166 prior to their earnings, because at least that would give us enough room to maybe save the earnings flush if ever it's not well received by the market. That being said, the bulls are putting in some nice moves right here. If for ever which reason, guys, we get the extended earnings flush, that could potentially bring us down into the maybe 140 area. That would be the 50 weekly moving average. It will be prior area of confluence, right? There's a very nice area of confluence for AMD down here. We're talking pretty much this whole 148 all the way down to about 131, very juicy area of confluence for this stock. So if ever we do come down here after earnings for NVIDIA, for AMD, I will be playing this stock in this location. So let's just keep an eye on that, guys. Very difficult for me to give further price action because, as I explained, earnings are so volatile that they can really move this stock either way. So I figured I should just give you guys the buy targets that I'll be shopping for prior to their earnings cycle. Now moving on to Amazon. Amazon looking very good, getting boosted by Microsoft and Google earnings, up almost 3.5% on the Friday session. Amazon was in a daily downtrend for literally 1 day, right? So they lost the lows right here, daily downtrend, and now we've engulfed the move. So 100% recapture by the bulls. If we get some continuation, guys, that will be an over 100% engulfing move, sets up the bulls beautifully to do something like this, right? Break out of this range, retest our prior range of support around the 178 mark, and then run. That is what I'm looking for on Amazon. Your weekly higher lows at this point are pretty much set. We did not break our prior lows that were set earlier in the month of February. So looking good, still protecting this weekly uptrend very beautifully, right? Reacting nicely from our zone. And now we're back above the 178. 178 was a crucial area back in 2020 and 2021. So looking forward to Amazon. Amazon has earnings on the Tuesday session as well. So fairly muted price action too. But if you ask me, guys, and the guidance supports that, I think that this will be another record quarter of profitability for Amazon. I'll quickly remind you guys, Amazon for a very long time was a non-profitable company. Not because they couldn't do it, but it was by choice. They were reinvesting a lot of the money into capital expenditures, growing their network, growing AWS, growing their advertising business, right? Now that all those lines of businesses are at the scale that they want, and what are they going to do with the cash now? Well, now they're going to start piling cash flow upon cash flow upon cash flow, and we could be potentially expecting heavy share buybacks from Amazon at this point, looking very good for the company. So I would not be surprised, guys, if after the company earnings, if they are as bullish as I think they are, that we're probably going to be heading to new all-time highs. If for every which reason they're negatively received by the market, because that can also happen, think of Netflix, think of Meta, right? They had great earnings, but the market just found one little item in each of those earnings that they didn't like and sold them down. If ever we do get that sell down, guys, 160, I am going to add to my call position pretty heavily, and it's going to be a very juicy trade. That 160 area is the previous gap fill location right here from the prior earnings cycle, would be a very juicy trade. So we'll keep our eyes peeled on Amazon for the Tuesday earnings session. Now moving on to Google. Google not looking too bad at all either, right? So Google up about, 10% after their earnings, looking very good. Now we're pretty much at all-time highs for Google. So monthly trend expansion is the first thing that I look at, looking extremely good. The month of April finishes in literally 3 days at this point. So the monthly candle should close very hard. It just goes to show, guys, that we probably are going to get further continuation into the rest of the year on Google. I love their earnings. Nothing bad to say about the company. All of their lines of business is really delivering on their promised expectations. So now, daily uptrend obviously going to be in motion by Google. If we do get some heavy retracements, guys, this area of all-time highs right here at this point is relatively far away. We're talking about 7%. The markets would really have to fall apart for Google to recover all of this gap, right? What we are expecting usually is just a little bit of daily retrace here, looking for the daily higher low for further trend continuation. So I will be looking for some potential trades on Google. If we do get a little bit of a sell down right here, could be writing some short puts all the way in the 160, 161 area. I don't believe it gets back there. And even if it does get back there, big area of previous resistance, that'll now be support. All your moving averages are going to curl up into this area. That's why I think it's going to be a juicy trade. If ever we break out, come down here, write some puts down here. I don't think that they get filled. Even if they do get filled, guys, very nice bounce trade opportunity on Google. So looking very good. Now moving on to Meta next. So Meta also looking very decent. Nice little recovery day after their earnings crush on the Thursday session. So up 0.43%. Still a little bit muted though. Meta is still in the context now, guys, of this extended daily downtrend, obviously clear as day, right? Now we're looking for the size of the bounce. So the whole time that the bulls control the hourly time frame, and I agree, Friday wasn't the prettiest, but we did maintain the hourly time frame, right? If I remove my after hours trading session, you'll kind of see that a little bit better, right? We didn't lose the hourly trend at all, right? It is not the best, right? Since we're still struggling with this 445, 446 region, but it is still an hourly uptrend. So if ever we break above 445, 446 on the Monday session, that means your daily move higher will continue. And then we'll be looking at the size of the bounce, guys, right? The size of the bounce, in my opinion, needs to get at least as high as 463, at best 473. If we can get into that location, sets the bulls up nice to potentially get a daily trend change in motion and start undoing a lot of the damage. So Meta still has to do step one. Still need to get a good enough size of the bounce. Then step two is confirm this bounce into a new daily uptrend. Then we can start thinking about potentially attacking the recapture of the weekly uptrend. But all in all, I'm very, very bullish on earnings from Meta, guys. If, the opportunity presents itself where Meta kind of dips a little bit back into 430, high 420s this week, I may just be tempted to write some short puts once again, maybe 410, 405 region, if I can get some good premium on them. Such a good location for Meta. And the valuation, we did them last week upon earnings. The valuation is amazing, even at $415, guys. So amazing. 1.37 PEG ratio for a company that's generating record revenues, record profits. Just such a great company, guys, at a relatively cheap valuation. Now moving on to Microsoft. So Microsoft, nice little move up after earnings, but they gave a little bit of it back, right? So Microsoft at one point was up about 4% on the day. They only ended about 1.82%. So giving a little bit of it back, but that's normal, guys. We were dealing with overhead resistance, right? So we were dealing with the overhead range horizontal resistance line, 415. We're also dealing with the moving averages as Confluence 2, right? Microsoft hasn't been below these moving averages in quite a significant amount of time. Only last fall were they doing that. So a little bit of a struggle right now, but what Microsoft is trying to do, they had a daily downtrend. Now we're trying to pull an Amazon, right? Look at these three candles. Look what Amazon did. Same thing, right? Daily downtrend into last week, engulfing move. Microsoft, same thing. Daily downtrend into last week, engulfing move of your most recent leg of selling, sets up the bulls nicely to set the daily higher low for further trend change. Think areas for the daily higher low, guys. Think this level right here, 400, right? 400 prior support could be acting as support for the bulls. So looking for them to put in the daily higher low and then smash last Wednesday's high and last Friday's high as well to really confirm that the daily uptrend is in motion and start attacking these moving averages and start attacking this higher area of resistance as well. That would look very good for the bulls, even though the bulls temporarily lost the weekly with that little bit of a move down. They did not close below. So I would not say that this is a loss of the weekly uptrend just yet. Still holding these lower closes. So not looking too bad at all on Microsoft. If we were to come down below to this $400 range, I may be tempted to write some short puts under Thursday's low, 385 maybe. I don't think that the bears are going to retest this area. Microsoft earnings were very bullish. Now moving on to Netflix. Give me a quick second. Moving on to Netflix. Netflix not looking too bad. I know it says red here, 0.63%, but really an inside day with Thursday's trading, right? Green candle, red day. Unfortunate for Netflix, but what is Netflix trying to do right now? So Netflix is in a current daily downtrend, and the bulls are trying to reverse this into an uptrend. We need to protect these lows, guys. 542.41, right? So the bulls had a decent bounce attempt, but the bounce was not all that strong, right? Barely got up to the 50% mark. That's why the bears were so easily able to push it back down close to the lows. When you get a large bounce like this, guys, it's very hard for the bears to then engulf this move fully, right? They usually can come down about as high as this or as low as this, right? Maybe recapture 40% of the upswing, and then the bulls have another chance. Now, unfortunately, the size of the bounce was weak, which is why we came all the way back down to our lows, and now we're trying to make the attempt. So what you need to watch on Netflix on Monday is, can we recapture this hourly trend? Need a break of the highs of Thursday to really recapture that hourly trend and send this daily leg higher, and then break last Tuesday's high. We would recapture the daily uptrend. We'd be getting back above the 575. Look, 575 rejection area, guys. It's not for nothing, right? That area right here is not that strong. That area is coming in from 2 years ago, 575, 580 to 2021 and 2020, right? So we need to get back above that level. Netflix right now did lose the weekly uptrend as well. So take a look at this. Nice weekly uptrend, but now we flushed the lows, right? So now we will have to probably two-step recovery this process. What I need to see from the bulls is get me a sustained daily uptrend back into the roughly 600 zone, because that then creates the space on the weekly, right? If we get a nice daily uptrend, leads us into a weekly bounce as well. That needs to come up at least to 590, 600 on the fibs on the weekly, and that could set up the bulls beautifully for the potential two-step recovery using 575 as support. If ever we come to further to the downside, daily downtrend continues and weekly consolidation continues, guys. Just looking for healthy monthly consolidation on Netflix. And if we really do break these lows here, guys, I think that 520 down to 500 is such a juicy buying opportunity for the company. So those are the areas that I'll be looking to play it myself. Your 200 daily moving average is down here at about 505 as well. Very juicy area for the monthly breakout, retest, and run. So now moving on to NVIDIA. NVIDIA having a substantially amazing day on Friday, guys. NVIDIA just really reversing everything. So we were worried that NVIDIA was in a daily downtrend for the past 3 weeks at that point. And now we were looking, can the bulls, with the size of this bounce, have they created enough space? We'll take a look at the space they created, guys. This is why space is so important. They came up to the 618 level, which gives them a very good chance at resetting the daily uptrend. And they took that chance and ran with it on the Friday session. So now daily uptrend is back to the bulls. We're now back above a few key areas, guys. Horizontal area, 850. That was previous support, was acting as resistance. We're back above it. Back above all of your moving averages as well. Looking very good. And on the weekly, look at this weekly engulfing move on NVIDIA, guys. Looking extremely good that the weekly higher low is set, and that now we're potentially moving on to further weekly uptrend. We never lost the weekly uptrend on NVIDIA at all, guys. We were always just looking for the higher low into higher high, and we almost got down in my area, 750 down to 700. Even that would have been very healthy. Look at this. We're now no longer overbought on the weekly after this consolidation. And even on the daily, guys, nowhere even close to being overbought. So this can have some legs for continuation on NVIDIA. NVIDIA doesn't have earnings for a while, not before the month of May. So it'll likely be carried by other names that do have earnings prior to them, right? So looking very good. Remains to be seen. Can NVIDIA break these weekly highs right here? 905 this week. If we can get a break of 905, it's going to be significant, guys, right? Going to break above this big level of resistance right here. 905 continuation. If we can do that in the context of continued SPY and QQQ recovery, there's no doubt in my mind that NVIDIA can really go tap maybe even this $1,000 mark prior to its earnings. Now moving on to Tesla. Moving on to Tesla. Tesla not looking bad at all, guys. The bulls did a great job after earnings of putting in a 100% engulfing move. That's why the size of the moves are so important, guys, right? almost 100%, about 95% retracement from your bulls right here. Now we've created so much space from the lows. Look at the space from the lows now, guys, 20%. So unless Tesla delivers us some very bad news, which, we've pretty much priced in a lot of it over the past 2 months, unless they give us some really bad news or SPY and QQQ roll over for further weekly consolidation, I can really see a situation, guys, where Tesla just tries and sets the daily higher low, because any move down now just going to be trying to set the daily higher low for the daily trend change. We have not had a solid daily uptrend on Tesla. I mean, there was one right here, but the more solid one that lasted for a few weeks was all the way back here in early February. So I'd like to see them get started on that. If they can get started on that over the course of this week, look at this weekly move, guys. Beautiful weekly engulfing move, weekly downtrend, and now the bulls potentially saying, no, that was the last leg that you're going to get. Now we've engulfed almost the entire move. If they can move a little bit higher, it sets them up beautifully for the two-step weekly uptrend recovery, looking very decent on Tesla and looking like the monthly low is now set as well. Clear monthly downtrend as well. Rejecting nicely, though, from our lower bounds of support. So remains to be seen, can Tesla create some space off these lows to eventually reverse this into a monthly uptrend? The monthly uptrend, guys, takes time. Each one of these candles is a month. So if you want a monthly uptrend, it's going to take 3-4 months for that to materialize, right? So in my opinion, no real rush for the company just yet. Nothing was said on the earnings that requires immediate investment, right? Yes, we've probably hit all-time lows on sentiment for the company, but in terms of revenues, I really don't think that Tesla is going to have anything good for us much before early 2025. Interest rates are still high, and as long as they stay high, demand for cars as a whole is just not going to be what it was 2 years ago, and Tesla will have to deal with that while still spending money to increase its factory production, right? So it's going to be a tough period of time for Tesla over the next 3 to 6 months, but we can have a situation where potentially we have bottomed on Wall Street and retail investor sentiment, which is going to maybe provide some lift to the stock. Do I think that we're going to go all the way back to 300? No, probably not. But the extent of this weekly rally that may be lasting over the next 3-4 weeks could bring us back into the 200 range. And after the 200 range, then we're going to be looking for the weekly higher lows for further trend continuation, guys. So looking fairly good on Tesla, but a lot of work still to do for the bulls. Now moving on before last, Palantir. So Palantir up 3.73%. Really, really good day for Palantir, guys. A lot of talk from AI last week, and obviously every time AI is mentioned by large tech names, Palantir is now included in that space. So nice daily uptrend recapture by the bulls, guys. That's what we're looking for, right? Daily downtrend was clear as day. The size of the bounce was pretty good. It was about a 50% bounce. The bulls used that to set the daily uptrend thereafter. Now we're looking good. We're back above our moving averages, barely, but still above them. Now the next area we have to attack at this point, guys, well, we're in it right now. I drew a line, guys, but in all reality, when you look at support and resistance, please always view it as a range, right? It doesn't need to be an exact science per se. You can just view it as a range, right? Whether the top end of the range is at 23.16 or 23 flat, it doesn't really matter. What we're looking at is the zone. Can we clearly mount above this zone, right? Clearly above this zone, well, regardless of, the pinpoint areas. Or are we going to use it as resistance and maybe look to really reset a higher low and continue this daily uptrend? We're currently still in this area of resistance, right? So what the bulls need to do this week to prove us that they're back in control, I need to see the mount above this area, because if we mount above it, it gives the bulls a great opportunity at setting the daily higher low here and then using this area as support and then moving higher, guys. That would also do wonders for the stock in terms of weekly moves higher. So think we're now in a weekly downtrend. We've now engulfed last week's candle. Still a lot of work to do, though, because our most recent weekly lower high is all the way up here at about 25, right? So that really needs to start being taken back by our Palantir bulls, but looking good. This is why I was saying, guys, 19 to 20, we had this labeled on the chart for literally the past months and months and months. And I was saying after the move up into here, if we can get some pullback into this region, which would just be looking for a monthly higher low for further trend continuation, it would be a great buying opportunity. And I still believe it's an amazing buying opportunity. Palantir with earnings next Monday, not this Monday, the one after. So we will see what happens with Palantir. Looking very good, guys. I'm still going to be aggressively playing Palantir stock in the lower 20 and 19s, even prior to their earnings, looking very good. Now moving on to PayPal. PayPal, huge engulfing move, 3% to the upside. Look at this move by PayPal, right? Very beautiful. So we had daily downtrend was clear as day at that point. We were looking, can the bulls create enough of a bounce? Well, In all reality, let me break it down exactly, right? So daily downtrend, now we got the engulfing move, and now we've set the daily uptrend back in motion, back above all of our moving averages as well, and now clearly above the 63 to 60 range between these two yellow lines, which was big resistance. PayPal is looking very bullish at this point, guys. The weekly uptrend is the key time frame I'm looking at now, right? We have been looking for the expansion of this weekly uptrend, this weekly consolidation. We were just looking for a weekly higher low for further trend continuation. I was saying that this may be a very good location for a trade. Now, keep in mind, PayPal does have earnings on the Tuesday session, and a lot of earnings prior, guys. They're just not kind to PayPal, right? Look at PayPal's really only had, I mean, even though they beat, guys, it's the guidance and the expectations, right? So last earnings was very good, but once again, the stock was down 11%. The one in Wednesday, which was the all-time crush of earnings on PayPal, right? That one was only up 6% after earnings. Take a look at all these earnings. Gap down. This one was fairly decent, but the stock moved lower thereafter, right? Even this one right here, gap down, right? So we really haven't had a positive earnings on PayPal that has lifted the stock 10%, and we may not get it this time around either. PayPal is still labeling 2024 as being a transition year for them. So if ever earnings are not well received by Wall Street after the earnings, I'm going to be expecting guys to make a play down here, $63 down to $61. As of now, we've created a lot of cushion between us and them. That would be roughly a 4, 5 to 7% drop. That is where I'm going to be looking to play on this earnings cycle, this current coming up Tuesday, 61.60 puts. I will probably be writing a few of those. But all in all, guys, if it wasn't for earnings, this stock is looking very, very nice for a current breakout. So let's see what happens after earnings. If we break these highs, guys, after earnings, that would be significant. If we can break these highs, in my opinion, guys, the next stop for PayPal stock, right? And those highs were about $68. Keep an eye on your weekly timeframes, right? If we break these resistance areas, next clear area that we're moving to is 75. So still representing good risk to reward right now, guys. Still about a 16% move up to that location right there. So looking very good on PayPal. That's pretty much everything we had for our stock review today. Now let's take a brief look at some subscriber requests. And then we'll look at my portfolio. So I'm not going to be doing any fundamentals on these guys, just really doing technicals for the sake of time. So first, James asking for Coinbase. No problem at all, James. I got you. Let's do that right now. So in terms of Coinbase, let's do a top to bottom analysis, right? Start on the higher time frames and go to the lower ones. So what is the context of this stock? Gorgeous monthly uptrend currently. I will, however, say a lot of people are using Coinbase as a proxy to Bitcoin investing. They are investing in Coinbase because they think Bitcoin is going up, not necessarily because Coinbase is going up, because the fundamentals for Coinbase are not very good at all. We did a quick recap of their earnings last quarter, and although they had, although they did beat expectations and the stock was up after earnings by about 8-9%, the fundamentals, guys, are just not the best for Coinbase, right? Take a look at their financials. The financials are not, they're not the worst, right? They do have more cash than they do have debt, so that's at least not that bad. They're just not profitable. There's no free cash flow for the company. Take a look at these net margins. Q4, they finally brought in positive net margins, but before, there's just no consistency here, right? Just very irregular profit margins, not predictable at all. So it's just not a company that you can easily say, yeah, I'm pretty sure that Coinbase is going to go up over time. If it wasn't because it was tied into crypto and the moves of crypto, arguably this stock would not have run as much as it has this current year because it really doesn't have the fundamental improvements that's warranted such a move up. Take a look at your EPS, right? Very inconsistent EPS. Even over the next few years, it will be positive, but there's barely any growth. This year, 3.85, next year, 4.14. Okay, that's some growth, 10%, but then 2026 expected to dip again, and 2027, I know it's far out, but we're expecting another dip. Even on the revenue, guys, revenue as well. Take a look at how inconsistent this revenue curve is, right? Not really consistent expansion. You want some consistent expansion, guys. Just take a look at Microsoft, right? This is consistent EPS expansion. So that's why it's so tough to say whether or not Coinbase is going to continue rallying to the upside. All we can really base ourselves on right now is the fact that it's a carry trade for Bitcoin. And since Bitcoin is still overall bullish on the monthly, Coinbase as well should still be overall bullish on the monthly, unless they truly F something up during their earnings, which I'm not expecting. They're on Thursday. Right? This chart should still continue to benefit from this. Take a look at this chart right here on the monthly, right? And then take a look at BTC USD. It is the exact same chart. And it's not as if I showed you the fundamentals, guys. It's not as if Coinbase is generating record profits from this new crypto volume. Not that much they have had net improvements in margins, but, not fantastic. So all in all, still looking good. Good monthly chart right here, not too overextended on the monthly RSI. The weekly RSI, not too overextended as well. Clear weekly uptrend, right? But that all stopped as of in the month of March. Now we're in a weekly downtrend. What does weekly downtrend mean? Well, we're just looking for the monthly higher lows, right? So what we're going to be looking for, James, in terms of the reversal, need to go from the lower time frames first. So daily, right? How do we reverse this weekly downtrend? You need to get a daily uptrend first. The bulls are trying to do that right now. They do have earnings this week, right? So it's going to be a little bit of a touchy stock. Let's say there were no earnings though. We'd be looking for the continuation of this daily uptrend. Once you get your daily uptrend, you know that your weekly move higher is underway. Then we look for the bulls to recapture as much of this move as possible, set the weekly higher low, and potentially move for the daily trend change. As of now, I see no red flags whatsoever. If we're looking for a larger area of support, you can obviously find this area right down here. If ever earnings are a miss, we'll be looking to our lower area of support, guys. 210 down to pretty much 185. That's going to be the area where most likely the bulls can find some support, and that is going to be a great area as well for the monthly potential retest of this area again, if ever earnings don't go correctly, right? But the bulls putting in a very good amount of defense down here. All in all, looking fairly bullish, guys. If it wasn't for earnings, I would say there could be a little bit of a breakout swing trade here to try and pick the weekly lows for this move up, but earnings obviously a toss-up. So we'll see what happens for those on Thursday as a whole. Now, moving on to our second request here. So second request is going to be Philly requesting for Palo Alto. Yes, of course. So if you haven't seen my Palo Alto recap of last earnings, I will link it down below in the description of the channel. But we went over there the reason why they got crushed, right? They were pivoting their business model. So Palo Alto used to do a bunch of different business features at the same time. Obviously, cybersecurity company, and cybersecurity offerings could be very complex sometimes, right? You have cloud protection, firewalls. You have so many different elements that companies can pay for. And what Palo Alto said, you know what? They said, you know what? All of this is fairly complicated for our clients to understand. So we want to make a one bundle solution of everything and charge our clients a monthly fee to maintain those systems. That's why they had a little bit of a drop here after their earnings. But all in all, the fundamentals of the company are very, very good. Nothing bad to say about them. That being said, guys, we're in a very, very juicy area for Palo Alto right now. If I just draw the technicals on the chart, you'll see that this previous resistance, guys, is now our range of support. In terms of the monthly, we'll do this top down again. So starting on the monthly bulls are in full control of this chart, just looking for the monthly higher low for further trend continuation. Look at this confluence, resistance, support, 12 EMA on the monthly right here as well, looking fantastic, right? Need to be patient for this trade. I know it's been sitting here for the last 8 weeks. Great time to be building a position on Palo Alto if you like this company. We're building a position at monthly huge levels of support. What better could you ask, right? That is a high probability trade whereby you make entries here, and if you're swing trading it, your stop loss needs to go below the low of earnings. Think maybe 255. So if we're entering here, 290, 255 is a stop loss. And where is your take profit? Well, you are riding this thing until we hit a loss of the daily uptrend, right? So looking very good. That's on the monthly. On the weekly, guys, what are we looking to do? Looking to reverse this weekly downtrend into a weekly uptrend. So take a look at this. The legs are as follows. This is the third leg down of selling. We have now engulfed it. So looking very good, guys. They're trying to shape up for the weekly trend change. How do you know that that's in motion? The daily uptrend favors the bulls as well. So what I would be looking for here, guys, is when we lose this daily uptrend and get a daily downtrend, that would be trying to set the weekly higher lows. And if we can pick these weekly higher lows, it'll be a great swing trade opportunity for the rest of the year for Palo Alto, in my opinion. Looking excessively bullish, guys. Yes, it's a bit slow right now, but the breakout is currently underway, back above our daily moving averages. And as a reminder, once again, we're sitting well above our key area of support. The bulls are looking very good. The fundamentals are looking very good for the company, and Wall Street loves this stock. So you have the wind at your back in that respect. So very, very attractive scenario. If you want to write short puts because you like the wheel strategy, I would be writing puts 270 all the way down to 250, depending on how on the premium that you can receive. Such a juicy area to be writing puts if you have the capital to do so. Now we're going to move on to Naveed's request. So Naveed is asking for ACMR and FCX. No problem at all. So ACMR, this is a semiconductor company, guys. If you don't know what they do, they are a final stage of production for semiconductors. So when a company like TSM makes semiconductors, when they make the chips, right? So the chips come off the factory line and whatnot, come out of the big ASML machines. Well, you need one final stage of that production process, and that is to clean and polish the chips once they come out of the assembly line. So this company sells machines that clean and polish those final goods chips from all the companies that manufacture them, right? Samsung, Intel, AMD, NVIDIA, obviously, right? So they are a very utilized business in the grand scheme of the semiconductors industry. As a whole, we're not going to run through the fundamentals, but a quick fundamental analysis that you can do, guys. Is the company profitable? Yes, they are net margin profitable between 10 and 15%, fairly consistent revenue growth, fairly consistent bottom line margin expansion, looking very good. Other criteria we look for, do they have a lot of debt? As you can see, not a lot of debt. They did run free cash flow negative a little bit because they're probably expanding their business with all the new demand of semiconductors, but it's not costing them a lot. They only have about $100 million of debt and sitting on about $200 million of cash. So good financial position. Is it a consistently growing EPS company? Look at this consistent EPS growth, right? Very nice EPS growth for the next 3 years. Very nice revenue growth for the next 3 years. So all in all, this stock should be a decent winner for this current narrative of AI. Now, I'm not going to run through the growth and analysis ratios. You can do that on your own. However, if we look through the technicals, guys, the technicals are looking very good. Monthly sustained uptrend currently, and now we're just in a monthly pullback looking for the monthly higher low for further trend continuation. Where are we balancing from? Very easy, guys. Just draw this section on the monthly, right? Include most of your tails and the bottom end of a lot of bodies. You see how quickly I draw that, guys? You don't need to spend too much time on this. Just understand the area that's working against us or in our favor right now. And the area that's working in our favor right now is an area from 2021 looking very good. So now that we know that our support is established, we're looking for that monthly higher low. How do we know the monthly higher low is set? Well, usually we'd be in a weekly downtrend, which we are. We are currently in a weekly downtrend. So how do we know the monthly higher low is set? Well, we need this weekly downtrend to reverse, right? How do we know the weekly is reversing? Well, the bulls need to get that weekly bounce underway. How do we know that the weekly bounce is underway? Go down to the daily. The whole secret now is this inter-timeframe analysis. If you're looking for the monthly bottoms, we're looking for the weekly to be bottomed as well. How do we know the weekly is bottom? Daily uptrend. If we can get another break of 29.10 over the course of this week, well, the daily uptrend will be back in motion for the bulls. And then we measure the size of the bounce. The whole time that this is in a daily uptrend, measure the size of the bounce in relation to the weekly, right? Big weekly move down. If we can get a 50-60% retracement on this, then if we get another little leg down, could be looking for the weekly higher low. And this is where I make the trade attempt. The trade comes in here, stop loss goes below these lows because we're either picking the weekly higher low here or we're wrong and we get stopped out and we try to reevaluate in the lower support zone. This is the location. Stop goes below here. Where are we targeting? All-time highs is TP1. Or sorry, that's not the all-time highs, but the highs of here, that would be take profit 1, and then we just let this one ride because it is part of the favored semiconductor trade right now. So that's just a quick way of running some analysis on ACMR, looking very good as a whole, guys. And if for ever which reason we further dive deeper into this area, well, just keep an eye, guys, the lower end of this range, $21. Very nice area, guys. The bulls have tons of room on the monthly. Even if we pull back for one more month, guys, we'd still be well within the context of the support. The moving averages are here. We'd be clipping the top end of our previous resistance as well. Gorgeous trade opportunity for this company, in my opinion. Moving on to FCX. So FCX, a classic copper producer, guys, in the market. So Freeport-McMoRan, very well-known company. Once again, fundamental analysis, very briefly, right? So revenues, fairly consistent, but not growing in the past couple of years. Profit margins, they did very well during the commodity surge after COVID, but obviously now commodity prices have regulated further back down to normal prices. So obviously they're not benefiting from as much profits as they had with those increased copper prices back then. But all in all, the company, this company is a industrial company. So usually they run a lot of debt because they have to, every one of their mines that they open requires a heavy amount. Mines, manufacturing, processing, warehouses, right? They require a lot of capital investment. So that's why usually these companies run more debt than they have cash. Not a bad financial position as a whole, though. Just you can see the evolution of their free cash flow. Commodity prices are good free cash flow. Commodity prices are back to normal, thin margins, right? Just the nature of the business that they're in. In terms of the forecast here, guys, you can see very cyclical business, guys. I don't like to see such inconsistency. It doesn't mean that the company's bad. It's just that their earnings are just not predictable, guys. And if you want to just keep analysis and stock picking It's easy for you guys, unless this is your specialty. If your specialty is commodities, then by all means, guys, go for it. If you have an edge in this market, by all means, go for it. But if you're just kind of looking for stocks here and there, which one could be good and whatnot, try and go for companies that show consistent EPS expansion and consistent revenue expansion. You can see this company is struggling to grow revenues very much, right? Whenever they open new mines and stuff like that, it takes so long to get a mine to where it's profitably in operational status. Just to give you an idea for gold mines, guys, when from the moment in time you put the first bulldozer into the ground, guys, it can take 7 to 10 years for a mine to be, in terms of operational efficiency, to be net margin positive. So this is one of the largest copper manufacturers in the world, but you can see, even being the largest in the world, guys, inconsistent, right? So that's why it's so tough to run fundamentals on them. As a whole, in terms of our technical analysis, the technicals are looking very good, but I would be wary in commodity prices coming down. That's going to have a negative impact on this company's margins in the future, in the next couple of quarters as well. It's still a good trade right now because usually these are trades that are cyclical with inflation, right? So whenever there's a narrative that when inflation is high, well, commodities companies usually do well because commodity prices are elevated in the context of inflation. But commodity prices have normalized now, so we're not going to see much. We're basically, what I'm saying for Freeport-McMoRan is we're not going to see this. We're probably not going to see this, guys. If anything, it might just be a slow grind higher until the fundamentals and profit margins get eroded a little bit more, and then we're probably going to do something like this. So I'm not expecting this company to 2-3x quickly, if that's the question you're asking. But let's do some technicals on them. So obviously we're bouncing off our area of resistance, $52 right here. We are in the context of a monthly uptrend, so any move lower, just going to be looking for a higher low for potential retest of these highs right here. We have a nice support area, $45, right? So this could be a very juicy trade opportunity for a little bit of a bounce play before retesting these highs, but very, very thin in terms of price action right here. In terms of the weekly's not looking bad either, right? Gorgeous weekly uptrend right here. Just looking for the weekly higher low for further trend expansion. So as I said, Naveed, just keep an eye on this location right here. Should be pretty, evident on the chart what we're looking for here. Coming down, weekly higher lows, 46 all the way down to roughly 43, this whole region right here, expecting the breakout, and maybe then we can retest this $52 range. That's in the event that we continue pulling back, right? But I do believe they just had earnings last week. Yes, they did, and they benefited from a nice increase. So the bulls are looking to now on the daily reverse this into a new daily uptrend. If they get that, then the weekly consolidation is most likely done, right? If we can confirm the daily uptrend, that's either a break of 51 immediately or the two-step higher low and higher high. Both of those daily uptrend recaptures means your weekly move is finished. So then we could be attacking the 52 highs and really start moving against the monthly highs and start moving back into these previous all-time high areas, guys. So not looking bad for the company, but as a whole, just not my favorite trade to make. I do believe there is better risk to reward in other tech stocks, right? That we may potentially know better, that have more consistent earnings and stuff like that. So that's pretty much everything for our subscriber requests, guys. Hope you enjoyed those. Now let's take a very quick look into my portfolio and see which trades I wrapped up for the week and take a look at which ones I do have open for Monday. All right, guys, so taking a look at the portfolio. Last week was a very good week, guys. Really shifting about a week and a half ago from a pure earnings play strategy with increased volatility away from the wheel strategy has allowed us to collect more premium than if we had just been running the wheel strategy alone. That's exactly what the goal of my pivot was, and we are executing perfectly. So as we can see now, guys, the portfolio is now back to about 6.38% year-to-date performance. That is now better than the NASDAQ and also better than the SPY. Keep in mind, we did start off the year heavily red because we were exposed to interest rate sensitive stocks and also exposed to stocks that were influenced by China's downturn. Nike, Starbucks, CSIQ Solar, just to name a few, we were kind of caught in those, and it took us a while to get out of those. But I'm very happy now in the portfolio composition and really looking to continue to outperform the SPY and the QQQs. We're just going to build on the compounding effect, and eventually, guys, we will start really beating the indexes similar exactly as to what we did last year. I wish I could pull up my last year's curve to see how it looked last year at this point, but it's really on a 1-year rolling basis, and the chart really looked the same in terms of last year. We started off last year relatively slow, and then it really started picking up March, April. The compounding effect of all the collected premium really started working in our favor, and that's usually when it lifted off. So looking fairly good, nothing bad to say in terms of that. So in terms of our performance here, guys, you can see that there's a few positions that I have left. I was able to exit, every single earnings play that I had last week at very decent profits. Meta closed above 430. We closed out of those, right? And then obviously Microsoft and Google closed above our strikes that I showed you guys on Thursday. So those are now out of the portfolio as well too. The ones that we have, just before I get into the ones we have for this week, let me just recapture all of the premium that we generated last week. So I'm not going to go through these individually. I showed you guys the portfolio updates all the way through the week to show you guys the strategy and which trades I was executing on. There was a few losses, which we talked about last week, but all in all, everything was good. So our Monday premium was about $156. That was really, it could have been a lot more, but we did take 2 losses on Nue, which was a steel producer pretty much. The market makers kind of effed us on the premium there a little bit, and I could have closed this trade a little bit earlier and minimized the loss. Instead of it being $250, it could have been closer to $150, but I did take the loss, even though the stock maintained above my strike. And Nucor, for as a whole, guys, if I would have held these through Friday, we would have ended pretty much above one of our strikes and below the other. But I just took that capital and reallocated the capital to more earnings plays. So that's the gist of the strategy this week, guys, as well as we're not in the business of holding losses and being assigned. If we have a loss the next day, we close it, reposition the capital to another earnings play. So Monday was a decent day. Tuesday as well was a decent day. $190 of profit there across the board. Let me try to maybe make this bigger for you guys. Apologies for that. So one loss was the Tesla long put that I took. So we were looking for the daily higher low on Tesla. Bit of a gamble, but I did lose $117 on that. So a little bit of, that's why playing weekly options, guys, is always a gamble, right? That's why I don't do it. I usually sell options. So Tuesday was a good day. Wednesday was a good day as well. Took a little bit of a loss on IBM. It dropped too much into our strike price after earnings, but IBM as a whole, guys, IBM, I'm pretty sure it is above. We actually closed above 165 on the Friday. So if I would have held this through Friday, I really would not have been assigned. But as I said with Nucor, that's not what we're trying to do. We took a little bit of a loss, reallocated that $17,000 to another play for the next day. Caterpillar, same concept, broke the 332.5s, which was a good strike. You can see Caterpillar ended above that, but since we were down close to it, even on the Thursday session, we were in like 340s roughly, and the premium wasn't coming out of the contract fast enough. So I just closed that trade at a very tiny loss, $25. What did I use the 33 grand for? Well, we used it to write Microsoft puts for $316. So you guys let me know, is it worth it to keep 33,000 of exposure on the table for $90? Or should we take this capital, go get Microsoft, which I prefer as a company? Caterpillar's a great company, but I'd prefer to be in Microsoft personally, right? So which would you do, right? Would you leave this position right until Friday? Or would you take that capital, take the small loss, reallocate it, and maybe make $316? Well, that's what I did. So Thursday was a good day, $264. Thursday, amazing day leading into the Friday session, right? $462. Slight losses on Tesla again. Tried to play the Tesla puts to the downside again. Not working out in my favor. So we closed that one too, lost $130 there. And the Tesla credit calls. Credit spreads, those as well. It is a bearish play. You write a call credit spread above the market, and if it ends below, you collect the premium. So it is an options writing strategy. I closed that after seeing that Tesla wasn't moving in my direction. So another $180 loss on Tesla. If I would not have taken these directional plays on Tesla, right? We would have made a considerable amount more, right? 117 plus roughly, or 180. We would have actually made $300 more. So lost a bit of money playing those Tesla trades, but they could have worked out in our favor too. The goal was to minimize the risk, to really get into these plays for a little bit of capital, and the reward would have been substantial, right? So that's the kind of risk that we're willing to take. So played out fairly good. Total premium on Friday was $462, which brings our weekly total premium to $1,072. If I were to include the Amazon long calls that we took on Thursday, that's another $400 that we made. The NASDAQ futures long that I made on the Sunday night session, expecting the bounce of oversold conditions, that was another $330. All that totals to $1,802. If we were to include the premium that I've generated since starting this newer version of the wheel where I'm only going for earnings, if we were to include Netflix and American Express from the week prior, guys, that'd be another $500. So all in all, since pivoting the strategy ever so slightly, in terms of premium at least, we'd be off roughly $1,500, $1,600 total in the past 7 days of trading. Very good, outperforming the regular wheel strategy. So that's what happened last week. In terms of this week, what do we have together on the portfolio? So a couple interesting plays. SoFi. You guys know how much I like SoFi. I loved their last earnings. I'd been waiting for these earnings, guys, to turn around in the right direction. What was I waiting for? I was waiting for the company to finally start generating profit, which they are, and they guided that they will be generating positive net margins for the first time in the company's history for this entire year. Looking very good. They are now finally, guys, starting to get into EPS positive territory and finally really starting to aggressively scale revenue over the next couple of years. So I love this stock, $7 to $6.50 range. I've been talking about this trade so many times in the past. They have earnings on Monday morning. So I didn't go too heavy. I mean, I know the contract looks like a lot, but keep in mind, this is like, it's like $700 per contract, right? So total exposure right here, 7,000 plus 6,500, 13,500. I actually wanted to do twice as much, but I told myself, listen, if ever it drops, that's when they'll do the extra amounts. So as of now, 10 contracts for SoFi. 8 cents a pop, fairly decent, $80 there we're looking to go get. And we wrote these $7 puts, 10 contracts as well. Look at the premium on these, 3% because it's an earnings. And SoFi, to bring me down to 7%, guys, they would have to miss considerably, right? We would have to go down, 11, 12% into my buying opportunity zone. So really not upset about this one, even if it does go down there. Looking very good. We got about $200 of premium on this one itself. All in all, about $270 worth of premium on the table for SoFi, looking very good. The Amazon 160 that we wrote before Microsoft and Google earnings, this contract should be fairly worthless tomorrow. So we'll see if I keep it. I mean, Amazon does have earnings on Tuesday. I will be playing them regardless, right? But it just remains to be seen. Am I going to close this one prior to earnings or just keep it through earnings? Well, Amazon's kind of a bit heightened now, right? They're kind of back up to the 170, 180 mark. So 160 is a long way away. I may move this strike up to maybe 165 if I can. So maybe look to close those very decently into profits. Those already, over 50% profit. Domino's Pizza. Domino's has earnings first thing Monday morning. So Domino's Pizza, very, very easy trade. Very, very value-oriented company, right? Their past earnings have been amazing after coming down from their, increase in, this was all supply chains, increase of cost of ingredients. They had to lay off a bunch of people. Now their supply chains are under control. They're back to economies of scale, renegotiated supply costs for the raw materials, raw ingredients, right? Company's now back on track very, very well. We're not going to cover the fundamentals. All you guys need to know is that we wrote the 455 strike. The expected move on Domino's is about 5%. So me going with the 445 is literally twice the expected move of about 10.5% and is in the lower area of support. I'll just put this on the chart right here. This is why I chose this one. It is twice the expected move and it is coming into a big, big, big area of support, right? Below that 445. So looking fairly good, fairly bullish on this company. Gorgeous monthly uptrend as well. Gorgeous weekly uptrend as well. So that's why I gave myself that extra space. And we didn't get too much premium for it. Went a little bit conservative on this one. Could have been more aggressive, but I chose nonetheless to get $155 of premium. Looking good there. We're still rolling with the Amazon 160 calls and these Tesla, the 150 puts that I really haven't closed yet, but probably will be closing them tomorrow. And that's pretty much it, guys. So we're going to load up for the Monday session as well. Monday after the close. Probably looking to play NXP. I'll be looking at the Logitech premium as well. Usually that stock doesn't move very much, so I'm not sure if I can get much premium. FFIV, probably playing that one. Then Tuesday before the open, we'll be probably playing a bunch of them. PayPal, Eli Lilly perhaps. 3M, stock's been crushed, so maybe able to get some good premium there. McDonald's, definitely probably playing McDonald's. Coca-Cola, definitely probably playing McDonald's as well. And that'll be pretty much it. So I'll update you guys tomorrow, or rather Monday on the Monday session for trades made. Similar to last week, I'll give you a portfolio update every single week, every single day of the week, just so you guys can kind of learn from what I'm doing, right? So all in all, very, very good week. One of our better weeks throughout the year so far. Very, very happy with it. So let's just keep on trading in that fashion. Hopefully you guys enjoyed this video. That's pretty much everything I had for you guys today. So I'll see you guys tomorrow in the top 5 options plays for the week video. But all in all, if you enjoyed this video, please consider dropping a like. Would really like it. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these videos every single Monday through Friday, except when we do them on Saturdays because I'm busy on Fridays sometimes. And as always, guys, if you have any questions whatsoever, or if you want to, if you want me to review some tickers in the style that I did today, please leave them down below in the comments, and I'll usually do those on the Friday videos. So take care, guys. I'll see you tomorrow. Hopefully you're having a good weekend, and peace.